In the previous live stream, I talked about my analysis on the dollar, what I'm anticipating to see in the marketplace. And so far, we haven't really seen much price action in the market, but I'm still anticipating to see the dollar gravitate to the upside after this 1 hour mitigation of the inefficiency. So let's look at Euro US dollar on the other hand to see what it's doing as well. So if we go to the 4 hour time frame, my key levels on Euro price hasn't mitigated any of it. We haven't seen much price action. Like I said, I'm anticipating to see right here. If we're gonna continue to the upside, I'd like to see price revisit this key level right here. The last down close candles before this expansion that broke a 15 minutes high. I potentially like to see price revisit this key level. If we're gonna continue to the upside, I want to see price come in here, and then I want to see a rejection of this position, a shift to market structure on the 4 minutes time frame. If I do see that, then I'll look for buys from here to continue higher. And if I don't see that, then I'll be on the sidelines. And what that means is that this lower key level will be the next draw on liquidity. And when we come in there, I'm still going to be looking for the very same thing, which is a 4 minutes break of structure at that key level. So if I do see that, then eventually we're going to be looking for trades of that position. You can basically see everything is already outlined on the chart. So all I'm doing now is waiting. So that is my analysis. Still remains the same on Euro. So let's look at USD card. I had to redo an analysis on USD card to see whether we can potentially get entries into the market because I'm still bullish on USD card. I still want to see price gravitate above these highs because, in my opinion, this is a relative equal high, which is also a low resistance liquidity. So I'm watching to see if price is gonna revisit any potential key levels. So right there, if we're looking at the 4 hour time frame, we can see price came to the downside, took liquidity, rallied to the upside. We have a high, a low, broke that high, closed above it. This was the last up close candle before dropping to take this liquidity. After we broke above it and closed above it, I wanted to see a retracement into this key level because this was the last down close candle before an expansion that broke that structure. Price came into it. Like I said, I'm waiting for price to do one or two things. One is mitigate the bodies or run liquidity. In this case, we mitigated the bodies or rally. There wasn't any 15-minute shift to market structure after that mitigation. If we go to 15 minutes time frame to see that as well. So for some reason, my trading view is slacking. I don't know why that is has been happening today. It just seemed to be a bit slow. So we'll just give it a minute and see if it comes up. So now, as you can see, after we mitigated that position right here, the 4 hour key level, you can see that right there. That was the last down close candles on 4 hour and also very evident on 15 minutes as well. You can see it very clearly. So after price came in there the first time, what I wanted to see was a 15-minute shift to market structure. After we came in there wasn't any 15 minutes break of structure. I was watching this high and this low, and price rallied above this high, but it didn't close. So that wasn't a break of structure. And after that, we went to the downside, broke this low, created a high, created a low, and then we broke structure eventually right here. So right here was the break of structure. So the next thing I did was to go to 1 hour time frame to see the structure price is creating so far. And after we mitigated this position, took that liquidity, we created a high, created a low, and we broke a 1 hour high. So let's look at weekly and see. And on the weekly time frame, you can see there's a significant weekly liquidity here. You can see that right there. So this weekly low price came, took that liquidity. So all we would like to see after weekly liquidity has been taken for us to look for trades would be 1, 2, 3, 1 hour break of structure. And as you can see from that key level right there, we mitigated that position, took that liquidity. That was a weekly low right here. It was a weekly low. So you can see how I'm aligning the 1 hour, 4 hour, and the weekly time frame. Now, after taking liquidity from a weekly low, we want to see a break of structure on the 1 hour time frame. Uh, Sorry about that, Peter. I think the internet is a little bit slow today. That's why it's happening, but it's gonna come back up because mine it happens on my trading view as well before it still comes back up. So now after 1 hour high got broken, this right here is my part of interest, the next key level that I'll be taking trade off. And I want to see a 5 minutes break of structure from the key level. And right here, we mitigated it, created a high, created a low. And then right here is a break of structure. Now, this break of structure right here, you can see that this was the first break, but we didn't close. We went to the downside. The second break, we didn't close. Came to the downside. Third break, we closed above this high. But the problem is now we've created this wicks here. And I want to see price rally above this wicks. And then we rallied above it, but we didn't close above the wicks. We came to the downside, rallied above the wicks. We still didn't close up above the previous wicks. So the next thing, price dumped, and then we broke above it, closing above the wicks. And this was the last down close candle before an expansion that closed above the wicks. So the next thing I'll be watching to see right here, after price closed above this wicks, I want price to revisit this key level, and I'll be looking for a 2 minutes break of structure from this point of interest. So right here, we'll have a high, we'll have a low, and this is a break of structure. After this break of structure, this right here was the last down close candle before an expansion that broke structure. Now we outlined the high. The bodies of the candle is our only interest, and look how nicely price visited that position. We'll make it blue. All right. Thank you for your confirmation. Thank you for confirmation, Peter. So after that, you can see the market came to the downside, mitigated this position, ran liquidity, and then expanded higher. So this right here would have been a perfect entry for us. But the problem with this is you can see the time. Time is right here. You can see the time is 23:28. So this was basically midnight or early in the morning for London session. So there wasn't any way I was gonna be awake by 3 or 2 a.m. for this trade. So I was basically already in bed thinking the trade is not gonna work anymore. So if I wanted to get back on this trade, this is what I'm gonna do. This is the high, this is the low, this is the break of structure. This high is going to be my entry. This would have been my potential entry position on this trade. But because of the time of day price came into that position, there's no way I would have gotten into this trade by that time of day. So, what I do in situations like this is I use this high. This is my supposed entry. I use that as a limit order. I place a limit order right here and then stop loss below this low, and then my take profit remains the same. So I'm going to be watching this very closely. If I do see significant move to the downside on USD CAD, then I'm going to place a limit order right here because maybe the market is not going to come back in here, but there's still a probability that it could want to revisit this key level in order to activate those positions because the market needs more liquidity to move. It needs more liquidity, and that liquidity is stop losses. So it needs to wipe out more traders before the major impulse to the upside. So it's either this right here is the last run on liquidity because we took liquidity from here. This could be the last run on liquidity after taking this liquidity here, and then we'll see an expansion. But if this doesn't work and we don't expand from here, then I won't be surprised to see price visit this key level. This high right here is another key level I'm watching very closely. And if I do see any sort of rejection price showing me that it wants to come to the downside, if I do see something like us showing me that we want to come to the downside, I'll place a limit order right here, stop loss below this low, maybe 1 or 2 pips below this low, and then my target will be the same position, being this overall high right here. And once we're there, I'm out. I'll take whatever the market has made me once we're there, and I'll get out and be on the sidelines. Because once we're above this high, I don't know what's going to happen. Price could decide to continue to the upside. It can also decide to reject and wipe these lows. So that is my analysis on USD card and the trade that I'm watching on USD card. Hopefully this plays out and we can make about a 1:5 risk to reward ratio on this one today. And that would be phenomenal as well. So another thing I'm watching is just I'm basically watching gold as well. So and gold, I'm not really gonna be trading gold for now because it's just extended. I'm just gonna have to allow it to do its thing. Another pair I'm watching closely for potential trade entries is Nasdaq. I'm watching US 100. I'm watching that very closely, and I'm gonna do the analysis to show you what I'm looking forward to see on US NAS 100. So I'm gonna clear my charts. So looking at this right here on the daily, we can see on the daily we're consistently creating higher highs, higher lows, higher high, higher low. And then after this higher high we created, after this low, higher low right here, you can see that this high, there's no break above. So it's quite a complicated price action. So we look at 4 hour time frame. And on the 4 hour time frame, as you can see, after we created this higher high, created this higher low, right here, right here, this is what we're working with. On the 4 hour time frame, we have this 4 hour high, we have a 4 hour low, and then this right here is our 4 hour break of structure. And after a 4 hour break of structure, this right here, working with the bodies of the candles, this is my point of interest. So I'm still bullish on NAS in as much as we took liquidity from this previous daily high and we're seeing this rejection. I'm still bullish. I'm still very, very bullish on NAS because, like, if we're looking at, let me just clear this. If we're looking at the overall market direction, we're bullish. Like, there's no reason for me to look for any sell right here. In as much as we're going to the downside, I have no reason to look for a sell. Now, looking at this, you can see we have a swing high, swing low on the 4 hour time frame and a break of structure. And this was the last down close candle before breaking that structure. So all I'm anticipating is for price to revisit this key level, and I want to see a 15 minutes break of structure. Now, when I see a 15 minutes break of structure, I'm not just going to jump in and get into a buy trade. The next thing I'll do will be to look for a retest and a 3 minutes break of structure. I'm going to show you what that's going to look like. So right here is my point of interest. Another key level that I also outlined is this. It's also very essential for us to note that we have an inefficiency resting right here. Now, it's not compulsory for price to come into this inefficiency, but the most important thing for us is to see a significant 15 minutes break of structure from this key level. And if we don't see that, then we remain on the sidelines. And do we see a 15-minute shift in market structure? The answer is no. Because so far, this right here, this is the high, created the low, created the high, created the low, then created this high. There's no break of structure, so I wouldn't be surprised to see price come back into this position before now anticipating to see a break of structure. If I do see a break of structure like this, 15 minutes break, then I'll potentially be looking for price to gradually come back down and then look for a 3 minutes break of structure, retest, and I'm in, and that will be our trade. Entry will be the high. Lately, I prefer just using the high, even though it makes my stop loss bigger, but it doesn't really matter. In my opinion, it's best to have a big stop loss and in a profitable trade, because one thing I've realized lately is that when I'm trying to be too nimble, trying to make my stop loss too small, two things usually happen. It's either I miss the trade or if I get tapped in, price could potentially come close to my stop loss and my broker will just take me out due to spread, and now I don't make any money. So those two scenarios, I'm trying as much as possible to cut them out of my trade, to know that if I'm wrong, I'm wrong, I take a loss. If I'm right, out of 10 trades, if I'm right, at least I'm always gonna get activated into the trade, and two, price is not going to take me out before it hits my, so without hitting my stop loss. So these are two things I made sure to eradicate from my trading, because I realized that it was really affecting my trading. And then when I'm in a big good trade, I end up either missing it or price taking my stop loss because my stop loss was too small. So I basically just had to eradicate these two things, and I just use the high, because I've realized from back testing and from also forward testing that most of the time, 7 out of 10 times, if you're right with your analysis, price is gonna hit the heights. It could come deeper, but it's definitely 7 out of 10 times is gonna hit the highs. We're always working with probability. There's no certainty that this or that is gonna happen. And if I eventually get in on this trade, I'm going to be looking at the low hanging fruit areas, the low resistance key levels, price areas that price can easily smash through. And this right here is one of them. My low resistance liquidity. So this right here would be my potential target. Once we mitigate that position, I'll be out of the market and I'll be on the sidelines. So this is my analysis on US NAS 100. And if you look right here as well, you can see we also have low resistance liquidity resting right there as well. So right there, we still have our low resistance liquidity. So I'll be watching this. I wouldn't be surprised to see the market gravitate to the downside to run this liquidity. And once that happens, the next thing I want to see is a break of structure, 15 minutes time frame. And then I'll look for potential entries into the market. So that is my analysis on US NAS 100. And in case if I do post a trade, just know this is the trade. But eventually, all my confluence have not aligned yet. I need to see this low get taken, and most likely low resistance liquidity get wiped out as well. So that is all I have for you today. I appreciate you all for tuning in. If you do have any questions, feel free to drop it in the chat. I'll talk to you all next time. Have an amazing day, everyone.